All right, good morning traders, and welcome to the Bookmap All Markets webinar. Good morning traders, and so this webinar here we'll go through order flow using Bookmap for any market. Most people want to look at the S&P E-mini, so we'll typically go through that and cover it in detail. Ask questions. This webinar is for you. So that you can understand the basics in order flow and then put the pieces together here to build an edge. All right, so let's get into the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right. So let's jump in here. Let's take a look and see what's going on in the order flow. And good morning, everybody, over in Discord as well as in YouTube. So hold on, let me get to the Discord chat room. And good morning, Slowdown. All right. For those of you over on YouTube, come and join us over here on Discord. We have all sorts of events all day long. Most of them are in YouTube, but not all of them. So you can take advantage of that. All right, so let's take a look here at this S&P, and we'll go through a very basic order flow reading for what we see at the very moment. But I want to go and look at the higher time frame. And one of the things I want to discuss today is trapped traders, traps, and then using this as an edge for ourselves. All right, so right off the bat, you can see that there's basically a trap right in front of us here. We had data at 8:30 here this morning. We see the reaction to that data is positive. And so far, the rest of the day has been positive on that data as well. And this is where we can see traps, etc. So let me just outline it here. This is what I'm talking about. Here's a range of activity, trading activity. We had data. It lifted it up out of that range, as you can see. And then we have it accepting above this range in here. Okay. Now this is a little dip below it here, but it came right back up, and we are basically retested the highs up here. And then take a look at the liquidity up here, guys. This is a really nice reading in liquidity. So we have tons of liquidity up here. In fact, you can see right after the data came out, this liquidity came into the order book. All right, so that's the reading here, and it was the core PCE price index, okay, the month over month, and it was actually less than expected, but that was a positive thing, at least up to this point. Right, so look at the sellers starting to come in right now. Actually, the reading would be that we came up, retested this high, made a lower high. I see a lot of sellers coming in. I see an order book skew in here. So yeah, I'm looking for these sellers to try to go down to the bottom of the range here around 60. And I see some liquidity there at 60, but there's also more here at 57 and 55. Okay, so this might be, it looks like pretty strong volume coming in. And we do have an order book in balance. See the orders following it down. So I'm still looking for sellers to attack this liquidity down here on the bid at 60, 57, and between 55 and 57. So that's what we see at the moment. We'll see if this turns into a trap. It's possible. Right, we're getting a little bit of a pullback at the moment. All right, let's jump back here. Let's look at our bigger picture before we start getting into the details here in the flow. Okay, so we have the daily chart here on the left, the hourly in the center, and the 15-minute here on the right. What's going on in the bigger picture? Well, we talked about this earlier in the week. We have this down day here, and now we're hacking around at the lows here. And this was to be expected, a move down and retest these lows, and maybe potentially continuation if we can break this and then come back down into this maybe 42.26 area, somewhere around in here is what I would look for, and that is not out of the realm. For today, it could happen as well. It is probably less likely we might get a retest back down, not only to the lows, but maybe somewhere around in here, around 93. We still are outside of the range of all of this daily activity here. Okay, and that is bearish. Right? We see a green candle for today, but we are outside of that range. Okay, so if we see a lot of buyers come in back into the highs of the day in here, then we're looking for a move back into the range, and it should be pretty strong, I would imagine. But we'll take a look at the order flow on that. All right, so that's our daily analysis. On the hourly, what do we see? Well, you can see this gap here, this move lower, and then the reaction or the pullback so far. And on the hourly's showing us some pretty good stuff here. Look at the volume in the subchart here as well. And you can see that some of that buying is coming in here now. Up in these areas so far, up here though, we see less buying. Right, so we see the gap up today actually in this hourly chart. We'll go over more in the 15-minute. Let's see if we get some more buying and try to make it back up to maybe these ranges here on the swings in the hourly chart. So up here around 43.80, and see if we can get that. We're going through scenarios in here, and then we're going to look at the order flow, the participants, to tell us or give us insight that that's where price wants to go, because there's orders behind it that tell us that. Right, that's a big distinction in here. What we do in Bookmap is, we're looking at technical areas here, but we're talking about the participants in the auction. We're not talking about it being a pattern, and oh, this is how the pattern works, and I have statistics on that pattern, whatever. Yeah, that's all good stuff, no doubt. However, we want to understand and get this edge here with the order flow. What are the participants telling us? So, for example, let me go through a candlestick pattern. Candlestick pattern in here may show us something, but we don't know what's behind it. Right? So, if we don't know what's behind it in terms of the orders, well, then it's really a coin toss of like if this pattern is going to work or not. If we can understand the orders behavior behind the pattern, we have much deeper insight for a more probable outcome, because it's based off of the orders behind that pattern. All right, so let's go over the 15-minute chart. Here's our gap up, and here it is. We're accepting higher so far. Okay, but we just saw those sellers come in, and we get a little bit of a bounce at the moment here. You can see a little bit of a wick here, but I'm looking for those sellers to retest back down to this like 61, and then see if we can get not only to the lows here, but I would look for it to trade kind of around the previous day high here, 55, and then maybe we can even get a gap fill or on a big red candle, okay, down into this area here around 38. All right, so anyway, that's what I see so far, and I want to go through, before we get into the trap traders, let's go into the well, let's first identify some traps, one trap here, because it might unfold here. Right here we have a lot of sellers. They are in control of this move so far, because we do not see buyers back up above here. Okay, if we see buyers back up above here, this is the trap. So far it's not a trap for them. They are in control of this market. They are moving it. They are now creating a lower low here in this little range here. So now we're getting our follow through on what we were initially looking for, was a move down to the lows of this range here, which we are now at. Okay? And we're looking for even more sellers to join the party and bring it down to the 55 to 57 area. Okay, is that clear? Right, so scenario one is the trap would be here. Scenario two is the sellers remain in control and we get this scenario, which is, it should be the opposite way. This should be scenario one, this should be scenario two. Okay, going through these scenarios and then looking for it to unfold in the order flow, that's where we can gain an edge on a more probable outcome. All right, let me see if there's any questions. Good morning, Stephen. Yeah, we had some major issues in Discord. It appears to me it was like Discord in general. I couldn't even DM a few people, but it looks like they got it fixed and it's working. Yeah, the first time I've ever seen anything like that as well. Yeah, I was kind of freaked out there for a bit, but everything seems to be good now. All right, let me jump over to YouTube. Good morning, Alois. Good morning. Is SPY closing the gap? I don't know. I don't have SPY up right now, but we're looking at the S&P, so it's basically going to be much the same here. Really, Rob? Well, I didn't have to restart, and it was working, so I'm not sure if that was the issue or not in Discord. Okay. All right, so let's go through. I wanted to focus today on these trap traders and looking for traps. This is such a powerful thing, and it's so easy to see in Bookmap. We can also I can also demo this along with the candlesticks that I was just talking about and what's behind the candlesticks. Okay, so let me we're looking for one of these scenarios to work out. Scenario number one, the move to the downside, is the one that's working out. Okay, so let's get rid of our this one can still work out. It's still possible. Okay, this could be a really beautiful trap, and we could see a nice move to the upside if we can get back up above here. Right, we would identify that these sellers in here lost control, and then they would be forced basically, or really punished to hold their position. So they would likely cough it up and they would cover up in here. Okay? It happens to us all the time, right? All of us. We want to be on the right side, and then this is where it's telling us we're on the wrong side. All right, so anyway, let's cancel these drawings here, and then let's look at yeah, other potential traps in here, right? So now in here, look at this buying in here. This is a pretty small buying. Look at it down here compared to all the selling in here. Right, so sellers still remain firmly in control in this move. This is a low volume pullback and offers really good opportunities for entry up in here and then looking for that continuation to the downside. But what I wanted to cover about these guys in here, perhaps they're this volume in here. Look at the size of the green dots and look at the size of the bars in here. They were able to move it back up here, the buyers, price creeped back up here. However, anyone that bought in here is likely they're going to be covering down here. Okay, so we should see a stop run down here, and we do. Okay, it's not much, but we see a little bit. Okay, so we would anticipate that behavior based on the trap. All right, so anyone buying in here, they feel the pain and they cough it up. Not much of a stop run. In fact, now we're seeing a stop run to the upside. And why would that be? It's because of these traders in here having to be forced or compelled to exit their position. Okay, that would be one of the factors for sure. Okay, buyers or sellers still in control though, right? Sellers are still in control of this move. Right? Does anyone have any questions on that? Identifying who's in control and who's not. and what might happen if they remain in control, or what might happen if they are losing that control. No questions. All right. Good morning, Hemic. Do you wait for a break of the structure? This is a good question. Now, based on the setup, you're talking about a setup in here. I like it when it starts trending like this. I really like to look for the break of a very small structure up in here, or maybe in here, and that's where I would be getting in. I know that the sellers are back here and coming back into the game. Okay, so I would be looking for a break of a structure on the pullback, basically. Okay, that's one way of looking at it. A lot of other traders that sometimes they just blindly get in. It's like if I get a pullback to here, I'm setting my limit sell. Okay, they're looking at the volume in here and saying, okay, well, it's worth it. This is a good risk to reward in here, and I will be getting in up in here. I don't like to do that. I like to make sure and see. This is my way of looking at it. Hold on. Let's clear these drawings again. I like to see that the sellers are coming in. I like to see exhaustion up here. This is actually pretty good stuff. Like we have high liquidity in here. Buyers come in, high liquidity comes in, lack of buying, not much. They cannot make even a tick higher here to make it an equal high or a higher high. And then we see the sellers come in somewhere in here. You can even look for a pullback to this range in here. And you've got 1, 2, 3 possible entries. Another entry is a break of even that little range in here. And here's where the sellers start to take control again. Right. So we're getting into the minutia here, Hemic. But you can see what I'm talking about now. These are where it's more probable, if you have less traders, a lower high, exhaustion here by buyers, more sellers in here looking for the continuation. Right. So these are the areas to consider for really optimizing your entries. Right. So if you're selling down here, this is what you got to put up with. Okay. So I don't think this worth the risk to reward for those kinds of breaks. Okay. Because you really get caught up in here. Like, so for example, let's look at this here. This is where these sellers and these sellers can feel the trap or the pain. Right. Now let's look at these buyers in here. This is where they're going to feel the pain right in here. So let's see if we get a lot of selling here at 60. I'm looking for it. Okay. In fact, this would be even if you had kind of scaled in and out of this position, this could be a scale in point here if you see those sellers, because you're looking for these buyers to have to cover, looking for the stop run to the downside into our zone earlier that we're looking at, 55 to 57. Okay. Makes sense? All right. Let me see if there's any other questions. How do you know those buyers are not shorts covering? We don't know. But we can start to look for, like I was just showing here, since we have the stops and icebergs indicator in Bookmap, the MBO data here from the CME, then we can verify this and look for that behavior. So that should help us determine that they were potentially new buyers coming in and feeling the pain and getting stopped out. Okay, hope that makes some sense. Okay, so let's see if we can get our move here and the continuation here. Okay, so now we're down at the bottom of this range. Okay, it does. Okay, great. So and then let's look here. Like, I'm looking for the sellers to remain in control. This is a lot of sell volume. Look at this. This is what we want to lean on in here. So we're looking for the follow through here. Okay, but this is where, like, as I put it in this kind of analogy here, is we're leaning on this behavior in here to look for this continuation move below the range here. All right, so let's talk about it this way. Here, 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 and here, well, all the way down here, we see sellers. Okay, so this last one, let's actually delete. Okay, but these three in here, let's get rid of this one and this one. All right, so it's like when we're looking for a higher probable setup, so this is helping us. We have behind us these like these orders here, and they're firmly in control. Like this is where it started. This is where they're tested, firmly in control again, where they're tested, firmly in control again, tested, and firmly in control yet again, and breaking the swing here. Right? And then there's our nice move into that. Okay, this is what we're looking for, like back here. You know, what was this at 10:06 when we started this webinar? So basically almost 20 minutes ago, we were looking for this move here. And now let's even we'll look at the bigger picture in just a minute here, but and put that perspective into play. Now we're looking for even a potential trap in these areas in here by these new sellers. Okay, so we'll talk about that in a minute as well. But the main point here is when looking for your setup, we want as much support, or I don't even want to use the word support, as much kind of help and assistance on our side. And order flow can help you here. We see it here, right? And we know that they're in control. So we look for the continuation, right? Now, we never know. Maybe some larger player comes in here, upends the whole thing, and then buyers jump in and we get some sort of mean reversion back up into these areas in here. Who knows, right? But this is what we know at this time. That these sellers are in control. They're moving the market on volume, and we have lower offers at lower areas here, and we're targeting the bids down in here to transact. Okay, now it looks like it wants to come down to the figure here, but likely we're going to get a bit of a pullback in here, probably back up into 50, 56, 57, 58, somewhere around in there. All right, so anyway, I want to underscore that point here that we have these orders and these traders on our side. Okay, and then that makes this move here more probable of working out. And now this is like not a trade recommendation. This is something, it's an idea, it's a concept for you to go and back test. Okay, and then let's go through actually let's look at our bigger picture for a second. We're getting that big pullback that or a pullback that we were talking about here to retest back up to this range here. Okay, is it going to accept or reject right here? The swing. Right, so we'll come back and take a look at that in just a second, and then we'll look at some candlestick patterns and talk about this order flow behind the candlestick pattern as well. Let's go back here to okay. Yeah, so here we go on this our larger time frame, our hourly here. A bounce around here makes sense to me. Okay, top of this range in here, and then even I'm still looking though for these sellers to come in and take this further. We've got some pretty good momentum here and some good selling behind it. So I'm still looking for on this 15-minute chart to trade to the 43.50, and then maybe we can get down into the 43.39 area, and that would be our gap fill, 38, something like that. All right. Okay, interesting. Let's just cover this one point before we start looking at candlesticks, though. Is this a low volume pullback in here? What do you guys think? Not low volume. Yeah, high volume. Exactly. Exactly. Thanks, guys. And uh, so how would you want to, let's just go through some scenarios in here of trade management. Okay, earlier we were just looking for a move down into this 55 to 57 level. And we got a bit more follow through, and then we're still looking for maybe this 43.50 area, and we just covered that also on the higher time frame. But this is something to note. This is not a low volume pullback. This is high volume. Okay, so in these little areas in here, these were beautiful low volume pullbacks, just beautiful. Let me get the pen tool out. I think it'd be a little easier to use. Okay. All right. So this is low volume. Okay. It's all low volume here. This all low volume. This too, all low volume. Okay. All of the sellers in here, as you can see, in here, and also in here, all the way through. Okay, remain in control. Okay, now that's going to be tested here. Right. So now, what I wanted to mention here is, because of this behavior in here, it might be a good idea to start managing your trade a little more actively. Maybe the market, we're looking for it to trade down here, right? That's what we're looking for. Okay. Now, we don't want to be shaken out of a trade. I'm not suggesting that. I am suggesting, though, that we need to pay attention to this. This is new information, and manage your trade accordingly. So, if you took some off down in, this area in here, 57 to 55, maybe you even exited the trade. Maybe you held some and put your stop at break even. In this little area in here, it's probably a pretty good idea to take some profit. All right. It's just an idea. It's a concept, right? That I'm putting forward. It's not a recommendation. So we have this new information here. This is not low volume. This is new buyers coming in. Okay. So now we can even entertain a thought of mean reversion up in here. And I'll watch these buyers try to move it here. Okay. And let's talk about stop runs in here. Okay, and traps. That means that all of these sellers in here, we should see beautiful stop run if we get these buyers, if we get the buyers. Okay, and this would be our mean reversion trade, right? And we know that up here, based on the order flow, this is where the sellers took control. This is where they'll be tested, and it coincides with the high volume node anyway. So if buyers can come in, and I actually am anticipating buyers to come in at this point, and I see a beautiful stop run down here with the red line, and then move back up into here. Okay, now we'll see. This is not something that I'm looking for as being highly probable. Okay, whereas the other one was, I think, much higher probability of this move down lower into this area in here, this 55 to 57. Okay, this one is less probable, just because I know that the sellers remain firmly in control still. So this is kind of a mean reversion in here to test these sellers up here. However, I don't want to mess with it. I don't want to be caught up in a trap here above this little range in here, and then have this just move down to what we thought it was going to happen anyway, which was our 43.50. So I'm not willing to take that. right? So I take that out of my trade plan. Okay, I'm still looking. I'm looking for this. I'm looking for a mean reversion trade, but it's not something that I'm going to trade. Okay, so what we're doing is, and there's some reasons for it, and then I'll talk about why we're thinking that. Do we get a lot of volume or liquidity underneath supporting it? A little bit, but they're really down here. I don't really see too much in the order book here supporting this mean reversion trade. So I'm not going to take it. And look at this. We just had exhaustion here, in fact. Okay, so let's just cover now another scenario in here would be what we're and you could look for this here for the break of the trend line, the break of this here, and then we'd look for that continuation move here. Okay, that would be more probable than this kind of mean reversion up here. Okay, however, we need to go through and get the players on our side. And do we have them here? And we really don't have much of anything here. We don't see the order book underneath here. We see high liquidity up here, high liquidity down here. Okay, I don't see anything else in here. We saw a little bit of like this kind of bluish area in here, and they just started to flash again, but down here at 57. And we see the reaction is buyers. Right, so this is not enough here for us to look for something really more probable. Okay, so I would just avoid it. And we knew that, because this is not a low volume pullback in here, that we want to actively manage it at that point. Okay, so we don't have to take a stop at the break even or, have this go against us and then take a crappy exit. We could have taken a much better exit down here or in here. Yeah, I don't know. I don't know who these players in here. I don't know if these are, big dogs or, big players, whatever. I just know that this is not our low volume pullback anymore. And it could be these mean reversion traders, but even then, like it's it's hard to decipher, what it is. We do see the stop run here. But look at the beautiful stop run here on the way down. And that continuation, right? And we would look for it to continue down to 50. But we mentioned that a lot of times what we see after a nice big move, like we do get some profit taking, which I imagine this would be some profit taking, and then there's also new buyers coming in. Okay. No question. They actually remain in control in this smaller time frame move. This is where they started to buy in here, and we have not gone below it yet. Right? And see how we avoided anything up here so far. We're like, no, I'm not really looking for that. Like, yeah, maybe at this point I'm still looking for it to go higher, but this is not high probability. Okay. And then we went over the other one. The opposite scenario is like, okay, if we can get, boy, I'm really using this tool today. I rarely use the drawing tool, but instead we went through the opposite scenario. If we can break this, then these buyers are the trap, and we're looking for the continuation. So anyway, they are bidding up underneath here. This is getting better and better now. See how they're building here? So this idea is gaining some strength here, but they're pretty far away. They're down between 53 and 55. If this was up here, at this area up in here. Very, very high liquidity in the order book here. And we get a little bit of a skew here now at 56. And let's see the reaction to it though. Okay, so if we had a higher bid and then we found big green dots in here, yeah, that would look pretty good for doing this now. Pretty good. And we don't really have that. So why would we want to risk money when we don't have all of the strength at our back? So don't take it. Consider that. Or if you do take it, you have some of the pieces of the puzzle, then lower your risk. Don't take a big position. Take half or a quarter or a third. Okay, if you're trading micros, you can do that. And know that it's not as probable. So don't get, don't let this mess with your mind in here. Like, oh God, it didn't work out. Well, it's not likely to work out. So, have some discipline, have some restraint. Don't do it. Okay, or if you must, you really reduce the risk. And wait until you see something much better. All right. We have a huge delay here on the YouTube stream. Really? Sorry about that. Try Alois. Try just hitting the refresh button. Sometimes the live stream, it's not showing that it's live. Try that. It should be like about 2 to 3 seconds delay. So I can test it here. So if I'll just draw up this little area here, and then let's see how long it takes here. Yeah, no, it's only like three seconds or so. Alois, it's no huge delay here. It's not bad. All right. Okay, so Pass, you're talking about the opening 4-hour doji. So yeah, I don't look at the 4-hour doji, but that reminds me to take a look at candlesticks. Okay, and we're going to cover now candlesticks. We'll have to do it on the lower time frame. But we're going to talk about candlestick patterns in here, but how to really make this much higher probability by understanding the transactions and the limit order book, both current and historical, that help give us much more insight. So here's your candlestick pattern in here. You're looking for a break of this low in here, right? I'm just going to use that pen tool again. You're looking for a break of the low here, right? And because we just came up here, we see a wick. Now we're looking for the sellers to come in here and test the wick here. And if we get a break below here on the candlestick pattern, if we get a break below, that is a sell signal. Okay, and it closes below basically. That is a sell signal on the candlestick pattern. You've got the wicks, that's good. Okay, now what's behind those wicks? Because we don't know. Here we go. Here comes the sellers in here. Now this will make the candlestick pattern much higher probability of working out. It's not boasting or anything like that. It's just true. We know we have sellers here at the bottom of the range in here, right? Now they've just tested it. They haven't broken it yet. Okay, now we're looking for the break here. Here comes our retest. We're looking for these sellers to hit here and then break this and then trade into next level on the candlestick would probably be at the swing here, and there's liquidity behind it. Great. Well, that's a great target then, right? Here they come, and then this is our pattern here, right? This is the break, and then if you trade candlesticks, then this is something to consider. Right now, you only have here, you've got a couple players on your side here. You've got the sellers coming in here. Okay, you have high liquidity up here. It's up higher though, so it's not the best. Okay, if you like candlestick patterns as well, you should know the probability behind that candlestick pattern working or not. Right? So to me, this is turning into a beautiful trap actually right now. Okay, so this is where this candlestick pattern is going to fail, and we're going to see buyers come in and go back up into the top of the range up in here in the candles, these wicks, and we have high liquidity here as a target. Okay, so what before was looking for that candlestick pattern in here to remember about the close below it here, retest or test these areas here, see sell volume come in, great. We can start to look for these areas here. Well, that candle hasn't even closed yet, and then here's the move back up into here. This here, these sellers here this is the trap. Okay, and this is what we're covering for the kind of theme of this webinar in here. Yeah. Anyway, we'll look for a better candlestick pattern in here as well, but we got to go through the scenarios in here, and then once we see these buyers come in like this, now we're getting some pretty good insight for that move back up here. And we know that these guys are going to be trapped. So if we have a trap, how can we verify that these are trap sellers in here? What do you guys think? Looking for an answer here. Okay, we're looking for a stop run. Okay, if these are the trap sellers in here. Do we get a big stop run here? Yeah, right here. Right, beautiful one. Okay, now there's our mean reversion trade has worked out. Okay, now we're going to look at a few different scenarios here. First is the this mean reversion, and then we're going to see if we accept or reject up here. And these are two different ways of trading or looking at the trade. One is the mean reversion, which has played out basically, right? It traded up to here. The other one is the sellers remain in control and looking for them to be retested back up here. All right, so anyway, there's the the mean reversion play has pretty much played out, and then we're going to identify other traps in here as well. Okay, and we're going to try to mix it with the candlestick pattern as well. So these sellers in here, we should get another pop and stop run if we can get back up above 63.5. Okay, so that would be your strong move, your low volume pullback, and another strong move. And it's not really the lowest volume in here on that sell side. Okay, so that's one scenario, and then we get our continuation. Okay, so we'd be looking for this here. Which one do I want to choose? The drawing tool or the or Bookmap? Let's go with the drawing tool here. I'm sorry. Yeah, the drawing tool. Here's the sellers being trapped. Here's the stop run up. Okay, so now here is again like either some profit taking or new sellers, but is it low volume? Is it really that good? It's not that great. So I don't know if we're now really looking for 65 to trade or not. It doesn't look that great to me, and I want these guys in here. I want to see the stop run and the move to the upside. That compelled traders are the ones that are the best. That's why we're covering traps. because they have to hit that button, and that's what we want to look for. Right. So we just covered this little selling in here. Let's cover the buyers though in here above this range in here. Okay, so where do the buyers take control and where are they going to spin out of control? Well, not bad. I mean, consistent buying through here, right? On this time frame at least. So is this the area we're looking for a break? I don't know. I mean, I think it's actually more down in here. We need to see like the sellers come down in here in this area. That would be more convincing to me, because then I know these guys are going to feel the squeeze and the pain, and then we can get that move into 50. All right, so now let's go through a couple trade scenarios in here for this. Okay, one would be that we're looking for exhaustion up in here, order book on our side as well, so lots of sellers in here and not too many buyers, aggressive buyers in here, lots of sell limit orders, and then we're looking for our sellers. So this gets back to Hemek's question about when to get in on some of these moves. So here's a small consolidation range up here. Okay, so well, if we get what we're looking for, we get buyers in or sellers in here with limit sell orders in the order book, and we get exhaustion by the aggressors in here by the buyers, and we start to see sellers come in. You can look for it, especially down here. I'd look for sellers to try to break it. This is where you can get in early, and then you've got a bit of a buffer for yourself. That buffer would be that if you're getting in here, you're looking for them to hit and test these buyers that are in control down in here. That would be the first step. Okay, so if you can get that. Okay, so can we get? Do we see that here in the setup? No, we don't, not yet. All right, so we got to look for that, and then this is where you're looking for it to go, and this is where you can either take some off or even I don't know how you want to manage it. There's many different ways to do this, but you could take some off or not, and just move your stop down, because at this point here, we don't know if the buyers are going to come back in and support this this move here. Are they going to come back in and buy again? Now, if they do, well, then you're going to likely be retested up here and maybe be stopped out. Okay, but that's why you might want to take some off, because you don't know. If you see massive selling coming into this though, stay in it, because you're looking for these guys to spin out of control. All right? So you can trade it down to this. Okay, get this dot here. You can trade it down to this. Oops. Okay, and then but we're still looking for the continuation. All right, but again, what we want to see though is like the order flow on our side for this idea, this concept. And we don't really see much here yet on our side. All right, let's see if I have any more questions here. You're on the NASDAQ. Okay, pass. Let's see, what about Discord in here? Nice stuff in here in Discord. Let's see. So slow down. Yeah, I'll take a look at yours in just a second here, your image. Oh, here come our sellers now, right? Yeah, this is too late for me to consider, because I don't know. I still don't know if these guys might be trapped, right? And I don't want to participate in the trap. I want to trade against those guys. Okay, so we don't know. That's why I'm suggesting, like, we know the buyers are in control in here. It would be, you could trade these things down to these areas here, but we don't know if the buyers are going to come back in, and they are. So now actually I'm looking for the move back up to 65. Does this make sense? Because these guys are trapped here. Watch the stop run here. I would anticipate the stop run up into 65 at this point. At least the top of the range here, 63.5. And that's from here, from this volume dot here. It's a beautiful trap actually, because look at the sellers here, right at the 63 or 61.5, right? That's why we'd look for it to here or here. Makes sense? And let's see if we get our stop run now above the range here. We should see beautiful stop run here. Right? So identifying these traps, right? You can trade it down to these areas here as well though. And that's why I suggested taking some off in some of those areas. Now it was a little shy of it. Instead all we did was kind of break it mildly here by a point and a half, and then the buyers come in, and here's our beautiful move and our beautiful little stop run here as well. Okay. All right, and that should complete the mean reversion trade as well. Do I find the CVD, Delta, and other useful? Absolutely. I wanted to cover that slowdown. I'm glad you brought that up. So what slowdown is talking about here is using the cumulative volume delta, the chart range volume profile here. This profile here is based off of the data of the aggressors, these dots, all compiled here in a profile for this viewable range. So if I zoom in here, you can see the viewable range is much smaller now, right? And so it's the data for this viewable range. All right, so what slowdown is talking about to identify potential traps, this is actually going to be a good example. Right click in your CVP column here, go to configure, and then click on delta. So this will be the buy minus sell. There's lots of ways of looking at this in here. We can actually split out the data here, buyers versus sellers here. We can look at it in terms of the profile here, the composite profile. We can also look at buy minus sell, the delta, and there it is. There is the potential trapped buyers here, because it's compiled here on the horizontal, and this is them. That's where we just identified them. And now here's our move back down below. Now watch this. So we can get down in here where these sellers are in control down here. These guys have to cover now, right? It did our mean reversion trade. It completed it up into high liquidity. Sellers are back in. Watch for these guys here, these buyers here to spin out of control. Okay. And we should get a really strong, nice move and stop run to the downside here and complete what we were looking for earlier. Not only this liquidity around 55 or 54, 50 is what we're looking for. Okay. And here comes our move. Okay, so this is another way of identifying who's trapped and who's not. Okay, it's a beautiful way to do it too. I mean, it's pretty obvious here, up at this range up in here. I think it's pretty obvious to use this tool here, because I mean, it confirms it. However, you're likely going to know it anyway, because you can clearly see it, that there's no one else up in here except some buying coming in here, right? That's the trap, right? Just like you can see it below this little range in the trap in here. However, what's nice about the using it in the column here as well is, like, you know, we've got this whole range in here, and we got a bigger picture trap above here, and that's a lot of volume too. Okay, so we're looking for that move here, but it has to. We know that these guys will spin out of control when we get down here, right? So that's when we have to identify where will they be compelled to trade, and it would be down below this area in here. Okay, that's too late for getting involved. right? Because now we're back in the middle of the range and we don't know what's going to happen in here. If we zoom out a little bit more, yeah, not bad, not bad. Like, you know, we can, let's zoom out a bit more here. Now you can just identify, no, I don't want that. Okay, so we can identify these guys in here, and then there's tons of selling all the way down. Right, so anyway, it nicely kind of cuts off the top here and identifies the potential trap traders in here. Yeah, good, great point slowdown. Thank you. You also were showing here. Let me show this image that he put into Discord here. Okay, identifying here the Iceberg orders. Okay, so let me turn this on as well, and I'll confirm it. Lots of icebergs getting filled here. Okay, look at the sell icebergs, not many. So what does this mean? What can we put into the picture here? Okay, well, this is where, you know, Bookmap is really helpful here in giving us this information. But what do we do with it now? All right, so we want to understand this data and this information here in the bigger picture. Okay, so if we get all sorts of buying icebergs in here, I mean, these are massive. Look at the size of these things in here. Let me turn it on in here, because there's a ton, and look, it's here. You can see it with the blue line here. Now, is it covering, or is it positioning or opening positions in here? That we don't know. We just know that there are iceberg transactions in here, and it is a lot. Okay, here's our 0 point down here, and then we're at like 12,000 in here on the cumulative. Let me show you my settings in here for stops and icebergs. This is what I use. It's different than Scott Pulcini, for example. I use summation here for the subchart. For stops and icebergs, and there are two different axes in here. You just have to note that, but it still gives me this representation here, or relationship between stops and icebergs, and that's what I want, is the reference. This is a massive amount in here. This is something like God, I wish I could just ping Scott and have him join and say, like, Scott, what are you doing in here? What do you think? You know, really a ton of iceberg buying in here. Okay, so let's put this to use though. Now we have a lot of icebergs. Okay, great. What kind of information can we gain from that here? Well, we know larger players use iceberg orders. Let's get the candlestick chart off. We'll come in back and revisit the candlestick patterns potentially here. So we have a lot of larger players here. And they have been buying since this point here. Okay, so all the way up to here. To here, actually, the most of it is here, right? Okay, so a lot of icebergs in this area here, in this little area, it's a huge amount. So let's go through now. Those buyers here. Now, we know that the sellers remain in control precisely when those icebergs were getting filled. So this is our point here to watch up here at 66, and we want to watch it closely. Okay, for the day so far. Right. So because if let's go through a scenario in here on the higher time frame, a higher time frame move here. If we can get buyers back up above here, that means that any of these larger players that bought remain, or they will be in profit. And you can lean on all of that larger player buying in here. Okay, even though we see all the sell dots in here, they're on the other side of the trade getting filled with their hidden orders. Okay, we don't have much in the heat map showing in here, right? The heat map is showing here and here. That we were targeting earlier between like this 57 to 55 area. Now we have high liquidity in here. Okay, so this is where the hidden orders tell us more. Like there was high liquidity in here getting filled. It just was totally hidden from the order book. So what we would watch and look for then is if we can get back up above 66 here, and then we see the large buying coming in. That's when we would know that these guys they're behind it, and you know that gives you wind at your back in your setup. And that's where this data here with stops and icebergs can help you. Icebergs in particular, right? Now, one of the things about icebergs is larger players, you know, who knows like what time frame, what are they looking at? Are they hedging? You know, what is their activities? That we don't know. Are they buying to enter, or are they buying to exit, or both? Okay, all of that information we really don't know, and that's a lot of kind of information not to know. Now, stops is something different. Stops are smaller players like ourselves that will just get stopped out and look for another high probability entry. That's a lot easier to understand. Okay, so that we can lean on more. We can lean on these icebergs if we go through that scenario, but it's got to come up, you know, to the 66 area. Okay, but the stop runs and then acceptance or rejection above or below these stop run areas are going to give us a lot of information. Okay, now here comes our move that we were originally looking for back here with all of that selling. So this is a really kind of complex move in here, to be honest. We got a lot of things going on in here for this to drop down to 50, and the simple move down to 50. Let me explain. So this is where we noted the sellers being in control, and then we noted this is not a low volume pullback here, right? So we're like, you know, that's not what we're looking for. Let's actively manage at that point, or consider your management at that point. And then you can even look for a potential mean reversion. And then up in these areas, in this whole little area in here, we're like, no, I don't like it. You know, this is not high probability. We stayed away from this area in here. We talked about, you know, if you do see something, you can take it in certain directions in here, but make sure that you reduce your size at that point because it's not as probable. Again, this is something you'll have to look at and backtest and work, provide work for, and really quantify that edge for yourself. That's really necessary. We can point to these areas in here, and that's exactly what the goal here of these webinars are, is to give you some really good ideas as a starting point for you to go back and test. Okay, so we can confirm it in the live market as well, but we've got to have many instances behind us to look for that. But yeah, thanks. Slow down. Nice imagery. If you have, let's see, Hemic, if you have a large amount of liquidity to the north, let's say, would price be attracted to it, or be considered selling pressure? It's a great question. It's all about context. Okay, so if that high liquidity comes in here, let's suppose underneath here, right now, let's suppose like right now, we had high liquidity come in here, right underneath here, and we see this buying coming in like this, and see how they're pulling in here, that liquidity. Okay, then we know that the relationship here of that high liquidity that just jumped into the order book has repelled sellers. We have not traded yet down to 50, right? And that's what we were looking for. Even in this move, we're looking for 50. It still hasn't gotten there. It might have to do a lot with the icebergs getting filled in here. And in fact, again, look at this. This is not a low volume pullback in here. Right now, here's our liquidity. Here we're going to get our answer, Hemic. This is what we're looking for. We're going to see if this acts like a magnet or repels it as an opposite of the magnet. Okay, I'm looking actually for buyers here. I know they pulled liquidity. I see the buyers come in here. I'm looking for buyers, and I would be targeting 59 up here. Okay, now would this be tradable in here? No, I don't think so. I don't think it's worth it. I really don't. You're in the middle of the range, and is coming back up to actually the bottom of this range in here where it broke. I don't like it. This is a horrible entry. You know, you'd be looking for maybe a pullback here, but yeah, I just I don't like it. I don't think it's in a range where it gives us good risk reward. Okay, there's the transactions into it. Now let's see. Do we get our buyers come back in? Okay, look at the spikes in the buying in here. Look at these dots. Okay, I would look for buyers to come right back up to the top of this range. This I actually would look at here as being higher probability of just trading up to here, just up to here right now. That's it though, because they traded into it and we bounced away from it, and we're seeing some buyers come in. Okay, very small little example here. Not a trade recommendation. Yeah, we don't give the financial advice here. It's something you want to look back and study. Okay, so there it is. There's the move. It's not much, right? It's like point and a half or something, somewhere around in here, like 55 to 56 and a half, let's say. Yeah, point and a half. Right, but you see what I'm saying in here? Like this is what we're leaning on in here. And this is not, that's why I said this is not a bad example. What we're leaning on in here for this little move just up to here, this is what we've got. We've got buyers here, here, and here. It's not a low volume pullback. We have high liquidity. Oh, they're pulling here as well. And we have high liquidity in here. Up at a higher level, it transacts. And it initially kind of repelled them, and then it transacts, and then we get the reaction we got were buyers above it. Okay, well, then these buyers still remain in control. So I'm just looking for it to come up here. That's it. Make sense? I hope that answers a lot of questions there for you, Hemic. And then now if we get even more in here, now I don't like it. Again, like I said, I think this is too far up to look for really good risk reward here. Okay, but if we can get our buyers up but in here again, we'd be looking for this liquidity now at 59. And now again, they're bidding up here, but I want to see them bid up higher here. Buying looks good, so maybe a quick move up here. Okay, and that our stop run, we should see a stop run here. We have not seen it yet, but I would anticipate a stop run above the range here. Okay. Let's jump back here and then not jump out of the minutia for a moment here and what's happening. Not much has been happening. It's been some back and forth in here on our 15-minute chart. Okay, I'm still looking for the sellers to come in and drive it back down to fill the gap in here. Okay, it's just partially filling it. Whoa, slow down. Wow. You got a few images in here. Great stuff. Okay. Slow down. I think we're going to have to do a uh, a webinar or event with you. You really become the resident expert here in these Wyckoff springs, which is a trap trade. Right? The spring is the trap, and that's why it works. And you know, you'd be looking for your stop runs. It tested below here, trap traders that are looking for the move lower, and then they're all upended in here, up in here, and then you're targeting top of the range and then maybe continuation as well. Yeah, it's really great stuff. And it's even better if like it comes from strength to begin with. Like this was a move up, and then this back and forth. Here's your move down, your trap. There's your spring, back up to the top of the range, takes them off, look for a continuation. It's really nice work, Stephen. Slowdown is really got some nice stuff in here. And look where you got in here. This is it's really beautiful. Beautiful entry here. You know, you're looking for that strength. You got in here, looking top of the range, beautiful. Looking for that continuation. Just it's picture perfect. And you traded it. Here's your pullback. It's still accepted above that range. It's a pullback to the range. Here's your ultimate target at 65. Beautiful. Really nice. Okay. Yeah, I love it. Yeah, look at this. Identifying this. See how you can just identify these things and you have these players on your side. You have this order flow on your side. And that's what we want. That's the edge where we want to look for. And Slowdown has turned that into a setup. And it's already been based on something that Wyckoff came up with, I don't know, like 100 years ago or whatever. Yeah. So thanks, Slowdown. Yeah, the first is entry detail and then viewing the follow-up to that. Exactly. It's a beautiful entry. Like you're waiting for those buyers to come back in. Now this is something like because you want to. How do you know otherwise? And you don't. And in fact, there's some risk there with that entry. You know, it worked out beautifully. There's some risk here still. Like it's really up here. Now you give away you know, some of that profit if you take it up in here. But it would be these here. Let's just zoom in a little bit closer. Like I think you had I saw another image of yours. Like you're getting in here, looking at this as being the trap, and then these buyers come in. So this is great. It's low risk in the sense that you don't have much at risk, right? But this is higher probability here, but your risk is bigger now. You know, so that's how it works basically. But is it really risky that you're going to get stopped out at that point? It's less risky. You're going to get stopped out. This is why I mentioned that here, is because here's the selling here, and this is where the buyers are going to upend those sellers. Okay, and they've got good momentum behind them. So like basically anywhere in here, depending on your risk profile, you can look for entries in this. Okay, so if you got in up here, you're not making as much. You got in here, you're making more, but it's also really probable that these guys are going to be the trap. Okay, and you don't want to be caught up in the trap. And then we can have the, you know, it basically exhausts out here. Maybe it does a retest here, you know, a swing here. Let me just draw it. Maybe it comes up here like this. You get these buyers here like you do. Okay, but then it come back down. Maybe it comes back up and retest. We get our exhaustion. You don't get buyers, and you see sellers in here. more sellers in here. Now you're the trap in here, and you get the continuation down. You're the trap trader. So that's the risk that you take here at this point, because you don't quite know that that momentum is coming back in yet. Here you have a better idea up here, like a point higher. However, now you give away a point. So it's up to the person's risk profile. All right. Really, really great stuff, though. Good discussion. Oh, that reminds me. So let me, since we're going over an image from a Bookmap Academy member, Slowdown, and I want to remind everybody that we have a meeting later today. It's open to everybody. Let me show you where it is, and if you're interested in joining. So it's the Bookmap Academy here, and I'll put this web page in the chat. Okay, so there you go. And also let me put it in YouTube here. Hold on. And the goal here is that we're offering this Bookmap Academy to elevate your trading skills. Basically, it's all free. And how do you join? Well, you need to apply. Okay, you need to apply to the Bookmap Junior Academy, and you apply down here. Okay, once you've applied in here, then you got to come back into our Discord channel after you've applied. Okay, and the Discord channel here is up here. It's this one here, the Bookmap Academy applicants, this one here. Okay, so come in here and then ask for your spreadsheet here, right? Oh, you never got your trader, you never got your spreadsheet? Oh no. All right, I can get it for you. Sorry about that. So anyway, we're going to have a meeting in here in the voice channel later today. Okay, it's going to be at 1 p.m. East Coast time. All right, and what the Academy is all about is this process, or these steps in here to become a better trader, much more professional trader. And Slowdown is exemplary of this process. He came in, he was interested, he was already creating good imagery, and then said, well, we have this thing called the Bookmap Academy if you're interested. And he said, okay, well, here, I'll just create some images. And he applied for the Academy. It was accepted, so then he became part of the Bookmap Junior Academy here. And that is a testing ground. You have to, we're going to filter out those that are interested and those that are not. If you create good content and you meet a quota of one per day, one image per day, that's it. It's got to be good content though, and that's more subjective. But you understand order flow at a higher level, so get good at it. This is an opportunity to identify and get good at it. And then if you do, then you applied for Bookmap Junior Academy, you become a member in the Academy, you prove yourself with that one piece of content every day. If it's good, then you will be invited to Bookmap Academy. That's where you can get Bookmap for free, Global Plus for free. So you've got to earn it every month though. You don't just get it lifetime or anything like that. You'll get it for the month. Make your quota again and you'll get it for free. If you double the quota, I will give you also the MBO bundle for free. Access to our stops and icebergs. You can, maybe you're happy with just completing step 2 if you want to take it further. And that's where we're going to go over today. We have some Bookmap Academy coaches. And we're going to review people's trades from the applicants to the Bookmap Junior Academy. So we're going to go over, just like we were Slowdown's image, we'll go over and review it. And that's what we're going to be doing later today. All right, and if that interests you, then come to our Discord channel, into this area here. The well, it's going to be in the voice channel. You'll see the live button later today at 1 p.m. All right, now the step 3 is the coach, becoming a coach. Step 4 is becoming a Bookmap Academy streamer. We already have people that have reached that level. We have 3. We have Doug Pless, we've got Tom B, and we have Moby, and they are now streaming. In fact, Tom will start streaming in about 5 minutes. Moby was on earlier this morning at 8 to 9 a.m. East Coast time. So we're offering you this kind of on-ramp to becoming a professional trader, and it's all free. Get good at documenting and journalizing your trading activity, and that's it. Okay, so anyway, if you're interested, I put the link there into YouTube, and take it from there. All right, so now let's go over this here, and we'll leave it at this here with the order flow reading in here. Look at what has happened down here. We never even traded to 50. And now we slowdown had shown us earlier 12,000 iceberg orders in here, that started to transact actually back even here, to be honest. Now we know their position as well, okay, very, very clearly, and this is very objective here. It's right here. I like this one better. It's going to be better on the chart. Okay, this is where they got in this area in here. Okay, this is where they're going to be in profit up here at 66. Right, so now look for ways that supports this idea for it to continue on upward. What is the order flow telling us? Where are there trapped sellers in here? When can we get like those buyers come in? And what is the liquidity telling us? Do we have these players on our side to support this idea? Okay, and we don't at the moment at all. High liquidity down at a lower level here, that's not good. Do we see support in the book on the bid? No, we don't. And do we see buyers coming in? Well, they, nice move here to the upside, but no, not yet. Not yet. Okay, now if those things change in here, if all of that changes here in this kind of weather pattern here in the setup, if that flow changes, then we have something. Right, so I'll leave you guys at that, and hope to see you later this afternoon. That is, yeah, like I said, it's at 1 p.m. Okay. All right, guys, I got to go. I'll see you then, and have a wonderful day. Good trading, everybody, and we'll catch up with you later, either later today or we'll see you next week. Thanks for coming, everybody.